we've got to pay for the interest on the debt. The only way of doing it is global liquidity, or is total liquidity. And as you go through, that then lifts that. So if you go back to that chart, there's the hockey stick over time, that longer term version of the banana zone that has to come into play, because if not, the whole system falls apart. So here we are, the shutdown's ended. It takes a while before the money starts flowing. So the TGA's only just kind of released $40 billion, but we're expecting like $200 billion or $250 billion over the next 2 months. So what happens then is eerily similar, should stabilize coming few days, next week, today, who the hell knows, doesn't really matter. I know it feels like it does, but it doesn't. And then the market took off like a rocket ship.
Raoul begins with a simple truth. Crypto didn't fail, the cycle didn't break, and nothing is fundamentally wrong with the market structure. What happened was far more mechanical, predictable, and rooted in liquidity conditions. According to Raoul, the reason the recent crypto rally failed to ignite, the reason Bitcoin stalled, why Ethereum and Solana didn't make new highs, and why lower cap assets completely collapsed is straightforward. Global liquidity was sucked out of the system. And when liquidity drains, it drains first and fastest from the most liquidity-sensitive asset class on Earth, crypto.
Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
People just don't understand, because I said it's not going to work all the time, but why didn't it start? Why did it break apart? Well, it broke apart very simply because liquidity got sucked out of the system, and it got sucked out of the most beta to liquidity asset in the world is crypto. So it came out of crypto. And if you think of the crypto beta curve, you've got Bitcoin and then Solana, let's say, and then let's say SUI. They're all different levels of beta or leverage to this trade. And what happened is liquidity starts coming out over this period. Now, the TGA should have been started draining two months ago. And once they drain it, it starts lifting asset prices significantly, the normal cycle. What happened this time is the shutdown of the government. So they couldn't drain it. So it got stuck at $1 trillion. And normally you drain it, but they didn't. So normally we would have seen something like 2022 where we start to see a drain. We didn't get that because it got stuck, because they stopped spending money. So therefore, no liquidity in the system. Therefore, stuff like M2 doesn't flow through the system and things fall apart. If we think about the crypto market outside of Bitcoin, you'll notice that none of these things have gone to new highs, really. I mean, Ethereum, Solana, none of this has. Why? Because it's driven by liquidity. US total liquidity has not gone to new highs yet, but it will over time because, again, to keep explaining this to you guys, because you don't want to hear me, and you lose impatience, then you go, why didn't it go up? Is we've got to do this game. We've got to pay for the interest on the debt. The only way of doing it is global liquidity, or is total liquidity. And as you go through, that then lifts that. So if you go back to that chart, there's the hockey stick over time, that longer term version of the banana zone that has to come into play, because if not, the whole system falls apart. So there you go. Now, the last time it shut down was back in 2019. Again, we kind of broke the plumbing of the financial system back then. So good. We broke the plumbing back then. Once it reopened, so it shut down, the markets didn't like it for the same reasons. The plumbing started creaking. The Fed had to come in, start going back from QT to QE, and also injected liquidity. So here we are, the shutdown's ended. It takes a while before the money starts flowing. So the TGA's only just kind of released $40 billion, but we're expecting like $200 billion or $250 billion over the next 2 months. So what happens then is eerily similar, should stabilize coming few days, next week, today, who the hell knows? Doesn't really matter. I know it feels like it does, but it doesn't. And then the market took off like a rocket ship. And all of this is to say that the reason we look at all of this stuff is Bitcoin is, and crypto is, a macro asset class. That's the important thing to understand. What it means by macro, it's driven by macroeconomics. And macroeconomics, for me, is the business cycle. And here is the business cycle, up and down. We talked about that before. And lo and behold, remember that, the 4-year cycle? Well, that was the crypto cycle. No shit, Sherlock, because it was the debt refinancing cycle. And right now, the ISM is kind of in that middle year where it's not hooked up, not grown. Bitcoin's slope has been frustrating for people. I want this bit. Well, it's going to come in the next 12 months, and everyone's going to go, he said that last year. He's a moron. He's just a snake oil salesman. Look, market analysis is not some sort of crystal ball where you see the absolute truth in everything. The everything code is the truth. How it plays out is still something we need to learn. And we need to understand the nuances. When the world gives you lemons like a government shutdown, you need to deal with it. You bought the ticket, you take the ride. And you just kind of grow up and deal with changing probabilities, because that's how the world works. We had a perfect 4-year ISM cycle that changed. And it's driven, the cyclicality of the economy is driven by the debt maturity distribution. So the debts have to be rolled, and we need to, because going back to this chart, if you remember, we pay it by debasing currency. And so when the debts get rolled, currency debasement increases. And that is the process by which markets and economies have operated since. It's all the same cycle, and it happens globally. So up until 2024, we had this perfect 4-year cycle. I mean, perfect. And that was because the debt maturity of the debts after 2008 was 4 years. And then something changed. And we're like, what the fuck is going on here? We didn't really understand it until we went back to this and redid the maths and realized in 2022 and 21, when rates went back to zero, they extended the maturity of the debt from 4 years to 5 years, or 5 and a bit years. And so what that did was break this. We had this extra year in the middle that we never had before. The extra year in the middle didn't need peak refinancing. The refinancing is for this coming 12 months. So we haven't had peak refinancing. So you didn't get peak economic growth. Economic growth was held because we didn't get that stimulus. Rates remained higher because of it. And the cycle extended to this. And this is the 5.4 year sine wave. Now, we don't know what the next cycle is going to be, depending where all the debt maturity ends up. They're all sticking it in the short end right now. It might shorten it back down to 4 years. Don't know. We'll have to see, but this is what we're dealing with. And where we should end up is peak cycle is somewhere towards the end of 2026. This is the reason we don't believe in the 4-year Bitcoin cycle that's suddenly independent of the NASDAQ. They're all the same cycle. Or the ISM, it's all the same cycle. But suddenly some people online, it's like, well, it's all over now. We didn't get our rally in November and October. It's finished, all over. Let's come back again in 18 months' time. Probabilistically speaking, that's a load of fucking wank. That probably gets me banned from YouTube. But wank's a great expression in England. Okay. So the game is paying the interest payments of the debt. That is where the debt growth is coming from, is the interest payments. Don't forget, the interest payments are now a larger part of the US budget deficit than the military is. And we do that by printing money. Dun, 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 dun. I mean, Christ, I've told you this a million times. So we print money, and look, we've got lots of debt to roll, and we need to print money to do it.
Raoul then reminds viewers of an uncomfortable truth. The U.S. must print money to pay the interest on its debt. Interest payments are now larger than the military budget. And printing money increases liquidity, which drives risk assets higher. This is not optional. It is not political. It is a mathematical certainty. And because of that, Raoul argues that crypto's pullbacks, even the terrifying ones, are not just normal, they are expected. They are part of the risk curve. He shows examples. Solana correcting 47%, 67%, then rallying 10x, SUI dropping 69%, then exploding 412% in months, then dropping again, then rallying again. This is how early-stage assets behave.
Right now it's about 28%. This is normal. You have lived it before. So it's like going, oh my God, I've woken up and the sun's up. Oh my God, the world's going to end. What's that ball in the sky? Well, it happens every morning. Well, yesterday was cloudy. I know, but the sun is still there. So you've lived this before. You understand the volatility. Oh my God, it's so hot. Yeah, because the sun's come up. Solana corrected. This is now the risk curve that I talk about. 47%, 67%, currently 48%. Oh, you see the stair step? SUI, newer token, lower free float. SUI corrected 69%, then went up 150% in a month to new highs. 79% in 2024. I don't know if any of you even remember the 79%. Then it rallied 412% in 2 months. 412%. Then it fell 68% in 2025 and rallied 157% in 2 months. And right now, we're down 65%. It's normal. That's what it should be for this maturity of asset and where it fits in the risk curve. This is all kind of normal. And so I finish off with this as ever. It's kind of my gift to you, and people still don't get it, is we are in this for the long run. Yeah, sure, you might want to take some lifestyle chips off. But really, if you're trying to do it cycle by cycle, you will fuck it up. And I've explained this all the time. The longer term time horizon, by being in it for 1, 2, 3 cycles, is where you really compound wealth. To try and think you're going to time the top, because I think, probabilistically speaking, all the people who think they've timed the 4-year cycle and they've gotten out because they're so fucking smart will have proved to have been wrong. Maybe. I think I'm so fucking smart, I'd be proven to be wrong. Somebody's going to be wrong somewhere. And that's how hard it is to get these tops right. But if you stay in it, and then you dollar cost average when it falls, you compound over time. I keep explaining this to people that can't understand it. You guys get freaked out every time by the volatility, and the volatility is your friend. And I keep explaining. Then I've had to say, okay, well, take some lifestyle chips off. And then it's like, well, my bags aren't up enough. I'm like, I don't know how to help, apart from explain patience, time horizon, and don't overcommit. And this is the don't fuck this up, is the overcommitting. No leverage, no FOMO, having high quality assets. All these people are like, yeah, but you fucked me because the markets are down and my holdings are shit. I'm like, your holdings are shit. If you don't blindly copy me because I've got a higher risk appetite than you, because I've got the ability to generate income and savings and assets. So if I'm 80% SUI, that is not what you copy. Please don't do that. I'll own some Bitcoin, some Solana, some SUI, and some ETH, and I'll be fine. And you'll be absolutely fine. Again, if you're doing degenerate stuff, do it with the small stuff, even with the DeFi stuff. Just don't lose control of your tokens. The longer term time horizon. Zoom out. Expect pullbacks frequently, and by the fucking dip if you can. Here we are. You should be begging anybody for money right now on the streets. Maybe if you can play guitar, do something, stand on your head for 10 minutes, and even do one of those stupid bloody statue things. Anything, just get some money and put it into the markets.
He warned strongly against trying to trade each cycle. Trying to perfectly time tops and bottoms is a recipe for disaster. Overcommitment, leverage, FOMO, these are the traps that wipe out investors. And most importantly, don't copy other people's allocations, especially not his. Raoul has a different risk profile, different income streams, and different goals. What works for him may destroy someone else. His closing message is simple, blunt, and powerful. If you zoom out, stay disciplined, and treat volatility as your friend, you will survive the noise and capture the long-term compounding of the macro liquidity cycle. Because that cycle is coming, it is unavoidable. And when it hits, it will lift the entire crypto ecosystem as global liquidity surges to pay for the world's debt burden.